Hey, welcome to Pro Trader Strategies. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman. I'm here to talk about the markets, teach you some strategies, and in all that, maybe even some economic data in there. Actually, we do the economic data every day. Let me get my screen out here real quick, but let's get it on with the economic data right away. Not a whole lot going on across the pond, but here in the United States, we got GDP, preliminary GDP anyway, and it came in at 3.1%, which is in line with expectations at 3.1%. We also got preliminary GDP prices paid, which came in slightly lower than expected at 0.8%, expected to be 0.9%. Then wholesale inventories. This is one we've been kind of keeping an eye on because we've been seeing wholesale inventories build a little bit, and it's not around the holiday season, which is a little bit concerning because the summertime really isn't a time to stockpile inventory, generally speaking. It's usually coming out of the summer and into the fall before we start making those builds for the holiday season. So we'd like to see them drawing down on some of these inventories. That's good for the overall business, and it shows that the economy is buying. One thing we're seeing here is that it came in at 0.7%, expected to be 0.2%. So we're seeing a little bit of a build there. Unemployment claims in line with expectations at 215,000. Remember, this isn't one of the major ones. We're really looking for the non-farm payrolls that comes out at the first of the month. And then we get, unemployment claims. Then, pending home sales, negative 1.5%, expected to be a positive 0.9%. So we're seeing those inventories build. You know, we're talking about this higher interest rates, people that have been accustomed to lower interest rates starting to look for homes. This could be a thing that puts them on the sidelines unless they're expecting, because they're expecting, I should say, maybe lower interest rates. Some people may say, hey, you know what, I'm going to hold off and see if interest rates go down in order to do that. Now, the bonds have gone down. People are able to lock in lower interest rates with the market rallying, but it could be they're just waiting for even lower interest rates is where I'm going with that one, I guess. And then natural gas storages comes in with a build of 114 billion cubic feet, expected to be 98 billion cubic feet. No revision the last month's number. And crude oil inventories, we usually get those on Wednesdays, but they kicked this one back to Thursday because of the holiday, and we got drawdown of 300,000, let's just call it that, and they were expecting a drawdown of 900,000 barrels. So less than expected, should cause crude oil to come off a little bit because that's showing inventories are rising and we're not getting through that inventory there. So, and then we got a couple of Fed members, FOMC members speaking today. All right, let's talk about the overall markets. Crude oil following through with that mantra where we see those builds and we should see the market start to come off. It's all about supply and demand, right? So with that supply increasing, demand decreasing, price has got to go down. That's the levers and pulleys of the economics of it. And anyway, so a settlement, like we've talked about, a settlement down here below $58 a barrel is going to make it look like it wants to go straight down to, a settlement down here is going to make it want to trickle down to somewhere right around 52.50, let's call it 52.50. 52.40 is where it's at, but as we start trading down there, we could see that move just slightly higher to the 52.50 area. So I'm just going to call it that. That seems like that is our target with a little bullseye on it, all right? So the market's going to want to go down and around to that level if we settle below $58 a barrel, because we're consistently seeing these inventories rise, slowing demand. All of those things should cause crude oil to roll over, and I think that's good for the overall economy. All right, we've got gold futures cruising a little bit higher, going to go up and test that 1300 handle most likely. I mean, we're only a couple ticks away from that with the equities being a little bit on shaky ground. At least the broader market believes that that's going to be a flight to safety. We were seeing gold trail a little bit on this rally as people were putting their money to cash or other assets like gold. Some were even seeing Bitcoin really rally And that is where most of the millennials are probably throwing their money because they're not really too keen on the stock market at this point. Another reason why Bitcoin is rallying, I feel, is because they've decided to get rid of the futures, and then those futures aren't really regulating that market in the open market outcry. So it's really a buy and hold kind of situation, which drives those prices higher. All right, bonds unchanged right now, up there at the 52 handle. One thing we were talking about with this is we talk about all the time, people who started looking for a house, let's just say they were buying a house in and around this area, starting to look around here. Well, they're watching interest rates start to go down, right? Well, when interest rates go down, it allows you to buy a slightly bigger house because now your money isn't going to the bank, it's going into your home as part of your principal, all right? So what people are doing maybe is that we're seeing this market rise. We talk about this as price rises, interest rates go down. So it's the teeter-totter, all right? So we see that happening, all right? And that's what's happening. We're seeing price rise and interest rates go down, and people might be just sitting on the sidelines. They're over there on the bench, kind of just sitting down, waiting for the markets to, twiddling their hands. All right, so they're just kind of waiting on the porch or on the sidelines to see if interest rates to continue to go down, because if they do, then I can get even a bigger house. All right, so that's what happens in these types of situations where people are starting to see interest rates go down. I'll hold off just a little bit longer, and I think that's what we might be seeing with that housing market right there. All right, VIX is trying to climb a little bit higher. It's down 38 on the day, or 38 cents in a cent, 38 cents. Anyway, it's coming off. We've seen Dow Jones really try to cruise higher here. It's up in positive territory despite the chart looking like that. Earlier this morning, we saw the ramp up almost immediately. It got me on the bandwagon of, I think we found a little bit of a bottom. A lot of these markets were gapping to the downside. That's usually a sign that we might have seen, not capitulation, because that's really where everybody pukes out, but this is a point where people are jumping off the ship, and that causes that market to gap down a little bit. So until we cover that gap, I think that the market is going to want to cruise higher. Now, it might want to just come up back to the point of control like I've been talking about. We start working through some of this, might extend down a little bit, but at the end of the day, I think that we are going to work through this and start moving a little bit higher in the equities. Not aggressively, but I do believe we are going to start moving a little bit higher here. All right, NASDAQ is up 27 points on the day. Again, off of the highs, but the market is trying to climb higher. With that being said, I think that we have found a bit of a bottom here, and we're going to start moving higher. I think all of these things below us, a lot of support happening here, and I think that the market is going to just start migrating again. We've got that gap here. We saw the gap in the Dow. Those are things that the market's going to want to cover. So we've got this little bit of gap right there. I'll just draw it in right there to there. It's very small, and we have this just kind of like a beacon that needs to be tested. The market needs to move higher and print that market in the day session. So I think the market is ready to start recovering. Sorry, I've got an itchy nose right now. All right, I'm trying not to sneeze. E-mini S&Ps didn't get that gap. They really kind of filled that in right off the open. We've gone to that point of control where I talked about as the magnet. We could see it settle down here just like the rest of those markets that we saw. One thing that the bulls are going to hang their hat on here, this chart doesn't look as nearly as good as like the NASDAQ and the Dow Jones with the doji here. But it was looking pretty darn good later on in the day, and it settled above that 200-day moving average. So that's acted as support yesterday and today. So a nice little support there to kind of keep our eye on when it's poking around the point of control. All right, E-mini S&P, as you can see, overnight inventory got very long. They tried to flush it out a little bit just now, but I think we're going to find a bottom here and start continuing that rally to the upside. Having said that, that's the kind of trade that I put on based on those types of assumptions. We can see in the NASDAQ, because it doesn't have overnight, well, the futures actually had the gap down on this one as well. But you can see this little doji right here that I'm looking at is usually a sign of a bottoming effect. Now, I started putting this trade on when I saw it piercing through the upper band of this stuff. And when we started coming back, I thought, all right, this is a good time to start getting into some premium selling strategies, because the Qs is above an IV, has an IV percent. It's just above the threshold of what I'm looking for, and it's greater than 30. So we've got that going for us. When I'm looking at this XYZ, when we come up with a bullish assumption, what do we do? I'm going to be talking about how to set these types of strategies up in the webinar today, where you come up with an assumption, but now what do? Do we buy the futures? Do we go in there and buy a call spread? Do we sell puts? Do I do a butterfly? What is the right strategy for a bullish assumption with an IV percent of above 30 with an ETF, right? ETFs have different rules than stocks. So having said that, I went in there with the Qs and I sold some puts in there. And I sold some puts in there. So with the Qs, I went into the, and I did these a little bit different. In the Qs, I went into the shorter duration and went into the June, because I want to play around with this a little bit. And because I'm loading myself up a little bit in the equities to the bullish side, I wanted to have some different durations going on. So I had a lot of things going on in my head with this. So with the Qs, I went into the June, like I said, and sold the 167 puts in there for 99 cents. So obviously the 167 puts would be throwing me down here right around in this area. All right, so that's quite a bit of ways to go. We can pull up a Fibonacci and see what that lines up with here as well. Make sure I got my Fibonacci. Let's just throw it up there quick and dirty. You can see my 167 puts plus the commission of $90 puts me below the commissions. The 167 puts I've got on. So I'm doing the June 167 puts. I sold them for 99 cents. Sold those. You can see with that 99 cents, I'm able to get my break even down. My break even is going to be 166.01, right? Because I get a full dollar almost. So my break even is right down here, right in between these two lines. That's my break even. So that's what I'm looking for. I've got a couple of supports ahead of me. As a matter of fact, I've got three. I've got the 200 day, I've got the 38 Fibonacci and the 50 Fibonacci. All of those are going to act as support. And now that we are below this market, I've got the magnet hanging out up here, right? The magnet's going to want to draw it back up. All right. So all of those things are working in my favor, and especially if I can get a confirmation above this top, that would be awesome. I'm out. My out is if the Qs trade right below this level right here. So let's call it 175. So I'm out at 175 on this trade. If it trades down there, settles below that low of the day. All right. So I've got my strategy built out. I planned my trade. I'm going to trade my plan. Breaks below my support level or my setup. This is the one I'm looking for the setup. Sorry, I've got my chart. I'm looking for the setup here. So as a matter of fact, I think this probably is in line with Steve Primo's rules for one of the strategies when it comes down to the 200-day moving average and then settles above there. That's what we're seeing there. I don't want to see this kind of chart setup, but like I said, I was looking for it when it was piercing above that. It did cover this gap because the SPY is the day. We saw the E-mini S&Ps. They didn't have a gap, but this is the gap I was talking about here. And it looks like it's been covered now. So I'm going to have to keep a diligent eye. Again, I'm out right here below 160. 176 is probably going to be my out on this trade. I'm going to be out at 176. And I went into the July. So I did the July and sold the 260 puts in there for $2. Just right at $2. I thought it was $2 and a penny, but I think I ended up lowering that down. So I got filled at $2. So these are the July 260 puts that I sold for $2. Sorry. There, I'm trying to cover up that little ding there. So 260 puts. Look at that, way down here. So that is a far way to go. And that my break even is now in this market 258 because I got that $2 credit, right? So that brings me down even further than that. So I've got a lot of support areas ahead of me. This 200-day moving average that kind of set that up. One thing I don't like to see is that chart set up like a settlement like this today, where you get the doji that looks like that, and then you get a counter opposing doji like this. That usually is a continuation pattern to the downside, and since we're in a bearish market, that could make that happen. So I'm going to be a very close watch on the 176 area. We break or settle below that in the next couple of days, I'm going to probably be out of it. Now, one thing I have to worry about is this being the point of control. We can bounce in and around that, but this is a strategy set up on a chart setup, so I'm going to get out on a chart setup. All right, that's all I got for you guys. Today we're going to be doing a webinar again where we talk about an assumption. We don't always know what strategy we want to implement in and around an underlying. We have to look at the environment. We have to look at the days to expiration and the option cycles and all of those things, whether or not they have earnings, to discern what type of strategy we're going to implement. And I talk about all of that. You go through check by check or checklist, planning your trade, and then you trade your plan, staying mechanical. You take the emotion out of it. So I'm not just talking about technical analysis and all of that stuff. I talk about how to be mechanical with these trades to increase your probabilities of success. So check that out at protraderstrategies.com. That's all I got. Take that.